Well, good afternoon, ladies and gentlemen, and welcome to today's webinar, which is entitled Drilling into the Financial Challenges Affecting the Industry. And the industry in this instance is the dental profession. Now, Havard and Associates have a long-standing association with the dental profession, stretching back over 20 years, actually. And as such, we are in a very good position to comment on the challenges for the dental profession in this day and age. So there are several financial issues faced by dentists and dental practices which may require urgent attention, and we've included four in our talk today, and they are pensions and the superannuation scheme, expense claims, tax efficient salaries and dividends, and financial support available to dental practices. We will cover these in more detail throughout this presentation. Excuse the slides for the present moment in time. Okay, so if we start with our first topic on the agenda, which is pensions and superannuation. Now, the NHS pension scheme can be extremely complex and confusing and may change depending on when you began practicing. It's effectively two different dates or two different schemes, and within one of the schemes there's two parts in itself. So if you joined on or after the 1st of April 2015, you were in the 2015 reformed scheme. If you joined before, then you're in the old legacy scheme, which is in itself is broken down again into pre-2008 and post-2008. Confused? Well, let's see if I can help you explain this. All of the schemes are known as career average revalued earnings schemes. Under this type of defined benefit pension scheme, in which a member's pension at retirement is calculated using their average salary over the entire period of their service with the employer. Under the old scheme, each year's earnings are added together into a pot and revalued annually by 1.5% plus CPI, which is the Consumer Price Index, to protect it effectively against inflation. Members receive a percentage of that pot as a pension and potentially a percentage as a lump sum. Pre and post 2008 schemes have some subtle but very important details and differences which I will not cover in this webinar due to the nature. Looking now at the 2015 scheme, 1/54 of your earnings are added to the pot each year and revalued annually to protect it from inflation. At normal retirement, members receive that pot as a pension. There are reduction factors for retiring early in both the old and the new schemes, and there are late retirement enhancements for both post-2008, and 2015 schemes. So let's look at some important old scheme considerations. Following a pension discrimination case and the government's deferred choice underpin response, some dentistry professionals will be moved back into the legacy scheme and their annual allowance reassessed. This may mean a reduction in your pension inputs, or you may receive a refund or be able to have your scheme pays corrected. These changes will be taking effect from April 22, but schemes have until April 23 to put them into place. All changes will be backdated to April 22, and anyone planning on retiring during this period could find themselves impacted by this and should seek financial advice. We at Havard and Associates have close connections with specialist dental independent financial advisors who can assist considerably with the workings of the superannuation scheme, and I would strongly urge you to contact us in the event that further advice is needed on this particular subject. Which moves promptly on to expense claims, and let's look at this in a bit more detail, which is always a favourite with dentists, to say the least. Okay, you need to ensure that as an individual you make fair expense claims and report them accurately, and I cannot emphasise that enough. You've got to get this right, otherwise difficulties can arise with HMRC. Now, certain expenses are classed as taxable, while others are not. And many dentists are caught out by this. A classic example of that would be private medical insurance, which can be paid by your limited company if you trade for a limited company, and the company does receive tax relief for the contributions. You, though, as an individual, also receive a personal tax charge on the back of that, and you need to be aware of that. It is important to be able to differentiate between these as they affect your tax return and eventually your overall personal and corporation tax bills. You do not have to pay tax on benefits and expenses covered by concessions or exemptions, so it is best to check to see if they may apply to certain items. And another major item that I would emphasise here is keeping expenses under control as your business owner is vital to the long-term health and benefits of your business. So let's look at some of the taxable and non-taxable expenses that you may be able to claim. The list of taxable and non-taxable expenses is significant, and there is no single rule that determines which expenses are exempt. Indeed, they are very much looked at on an individual by individual basis. Now, a full list of expenses and their tax treatment can be found on the HMRC website, but in addition, you can obtain a more detailed list from ourselves. However, if you're under any uncertainty as to whether an expense is allowable, professional advice should be sought, as it can prevent a penalty or inquiry in the future. Let's at this stage look at some key ones relevant to the dental profession. And in this respect, I've zoomed in on 5 expenses. We've got the professional subscriptions and memberships. Now, dentists are required to take up membership, obviously, with the General Dental Council. And in addition to that, tend to be members of other organisations such as the BDA. Contributions to these organisations are fully tax allowable. And as in addition to that as well, payments to the Medical Defence Union and similar organisations in respect of professional indemnity insurance cover. I'd also highlight the case of training costs. An important point to start on that was that once you have qualified as a dentist, I'm going to emphasise that once you have qualified as a dentist, the actual cost of qualifying a dentist does not count towards tax deductible expenses. The cost of attending training courses, conferences or CPD after you have qualified are allowable, and that includes the cost of travelling to the courses or conferences and reasonable subsistence whilst you were there, and learning materials attached to the actual course or conference. In terms of dental practice costs, and this is more perhaps directed at principals rather than associates, and which includes drugs, instruments, laboratory fees, technician charges and consumables within the surgery, these are all fully claimable. And even if actually associates were to pick up the cost of materials and laboratories separately from their principals, they too can claim tax relief for such items. Moving on, I've also highlighted another expense to claim: protective clothing and cleaning. The cost of protective clothing, tunics, surgical wear and so forth, is completely tax deductible, unlike the purchase of suits and casual wear, which can be worn outside of the surgery as well. These items are not under the duality of purpose rules. The costs of cleaning protective clothing are also allowable. The final expense bracket that I would like to comment on is equipment and surgery fixtures and fittings and the like. Capital allowances, the annual investment allowance and the new super tax deduction can all be claimed on dental and surgical equipment, computers and IT, and fixtures and fittings, albeit for the new super tax deduction to apply, the item has to be new and the cost has to be incurred by a limited company. Now, a word to the wise at this stage with regard to expense claims, and in many respects, perhaps a disclaimer from my good self. As to whether an expense is allowable does depend on your individual circumstances, and you should consult us first for clarification, as all expense claims are also subject to agreement with HMRC. Moving swiftly on to the subject of tax efficient salaries and dividends. Of course, this part of the presentation will only be relevant to those that trade through limited companies. Traditionally, directors of dental practices have always benefited from a lower tax bill by balancing their salary and dividend payments. However, changes to the national insurance system this year have meant that directors now need to reassess their remuneration packages. And these changes may mean that directors could now benefit from paying themselves perhaps a larger salary and fewer dividends. Research suggests that the ideal salary now is in the region of £11,908, and this is a perfectly tax efficient balance point to actually start with the remaining drawings requirements being met by dividends. Finally then, we will move on to the financial support available to practices. There is a wide range of important tax relief which could provide some much needed financial assistance. And these include the employment allowance, which is basically attended to via your payroll scheme and reduces your employer's national insurance charge. If your payroll scheme is maintained by Havard and Associates, then we will automatically attend to this on your behalf and ensure that the employment allowance is claimed. So there's no need. But if in any doubt, obviously, feel free to contact us. Moving as well on to the super deduction and annual investment allowance. Now, the super deduction is relevant, as I just said, in connection with new equipment and is only relevant to limited companies. And at the present moment in time, this is only relevant up to the 31st of March 2023, albeit subject to review, as are any suggestions, and we don't have crystal balls, so we don't know where we're going to go with that one. But the good thing about the super tax deduction means that if you buy an item of equipment, you receive 130% tax relief on the expenditure. The annual investment allowance allows you to obtain tax relief at 100%. So you can see the difference and you can see the benefit of this new super tax deduction that has recently been brought in. Turning now to the subject of R&D tax relief. R&D is research and development, and effectively where research and development is deemed to have been undertaken within your surgery and scientific advancements have been made, there is special tax reliefs that are available. It is an exceptionally specialist area of work, and whilst we don't directly at Havard and Associates undertake that work, we are in contact with specialists that can help. And if you are in any doubt as to whether this may apply to you, and we haven't contacted you directly to draw this to your attention, then please feel free to contact us and we would take it further on that. One other item that's not appearing on my slide at the present moment in time, but can provide a very good basis for tax relief, is capital allowances claims on commercial properties. And again, very specialist area, but we have successfully managed to claim significant tax relief on the part of practice owners who also own the freehold property from which they trade. Again, anything that's you're not sure about on that front, please feel free to contact us. Now, that effectively sums up the seminar, but obviously I'm more than happy to answer any questions that you may have, so feel free to filter them through. If for any reason, subject to modern technology, they're not coming through and there is a specific point that you would like me to look at, then by all means, please email me, and either myself or one of the team will be happy to come back to you and give you hopefully the answer that you will be looking for. So once again, thank you very much for joining, and all the best for the rest of the afternoon, folks.